Hey, good morning, everybody. It's Hammer. Today is Friday, September 5th, 2025. I, of course, am here with your daily mortgage rate update, the only place on the web where you can join me live each and every weekday morning, except for yesterday at 9:30 a.m. Eastern Time. Siegel, it is 7:30 a.m. wherever I'm at, Mountain, over here in North Dakota. So good to see y'all. We had some great data this morning with the jobs data. So we're going to go over that, talk about what's going on with the market, what that means for rates. So not going to be here too long this morning, but definitely wanted to bring you all up to speed, kind of dissect and pull apart what we actually saw. So remember, you can join me each and every weekday morning, 9:30 a.m. Eastern Time. We got Monica Dinkins, Nicole Semerad, Holly Johnson, Mallory Fotiadis. Good morning, all. Great to have you here. TGIF, happy Friday. Charlie Bedita, good morning. Good to see you, sir. So if you are watching on the replay, don't forget, give me a hashtag replay in the comments. Let me know that you were here. Don't forget, if you're on YouTube, go ahead and subscribe. Give us a thumbs up. If you're on Facebook, give us a thumbs up and tag an originator friend. If you want to get a reminder that I'm going live, you can go ahead and get a reminder at hmmr.io/reminder or use this cool QR code over here, hmmr.io/reminder. There's Bill sneaking in. What's up, Bill? There, see, Bill, you can see yourself. You're so pretty.
Internet famous.
Internet famous. There he is. So, good morning, y'all. Sean Segaloff, Michael Love, good to see you, Megan Vassell. I did not go live yesterday, Megan. I was on an airplane and can't do it from an airplane. So, anyway, we are live today. So, let me bring y'all up to speed. We did get the jobs data. Let me go ahead and share my screen, and I'll go over everything with you. So, okay, here we are. So, taking a look, the job market, crazy number, 22,000 jobs created. They were expecting 75,000, which would have been low. Only saw 22,000. So job growth much lower than expected. Unemployment rising to the highest since 2021. That's kind of a little, it's a little flamboyant of a headline, because the reality is that the unemployment was only at 4.3 instead of 4.2. So let me see if that's. I think I'll see if it was on here. I'll go to the Wall Street Journal article and we can see all the numbers here on how that all breaks down. Let's see, Wall Street Journal. Here you go. So nope. Now I got an ad. There we go. So, taking a look this morning, you'll see that hiring stalled. Definitely lower numbers. 22,000 jobs created, 13,000 jobs lost in June, which revised the numbers even lower than what they were. And like I said, it was 75,000 jobs expected, only 22,000 created. Unemployment up to 4.3, slightly above the 4.2. Looks a little dramatic when you see the headline talking about the highest since 2021, but it is actually the case. So anyway, let's talk about the reaction to this. This is the key. So you could see here, let me zoom in on, let me see if I can, there you go. All right, so if you take a look here, you will see that that we had a huge uptick at 8:30. So as soon as those numbers hit, here we were up a couple basis points. It was around 100.90, and as soon as those numbers hit, it bounced all the way up. We're currently at 101.16 for the 5.5 coupon, up 36 basis points on the morning. You can see it's a nice jump. And over 5 days, take a look at what we've seen happen on that. When you compare what's going on with mortgage-backed securities here, much lower. We're down here, very low 100, all the way up. You take a look at what that has done to Fed futures, and this is a big deal. Looking at expectations of what we're going to see for a Fed rate cut, we were already in expectation, 100% expectation of a cut in September. However, take a look at what we've seen now. Now you're looking at only an 85% expectation of a cut, because, as I told you would happen, as Ron Siegel and Mike Morano both made that call, that they think we will see a half a basis point, a 50 basis point cut, a half a point cut for the Fed funds rate in September. Markets also starting to lean that way now, about a 16% Fed future probability that we will see the market cut down by a half a point. I don't think it's going to happen. What do you guys think? Let me know in the comments. I'm curious what y'all think about that. But really, and look at this for the end of, sorry, the lobby got busy quick, so now you're going to have to listen. But if you take a look here, You can look at one rate cut is here, 2 rate cuts here. This was kind of the expectation. If we take a look here at and compare, the idea yesterday, we were 46% that we would see 2 rate cuts. That has dropped all the way down to 21% today. And the big lead is that we will see 3 cuts for the year, down to, this is 0 cuts, 1 cut, 2 cuts, 3 cuts, down to 3.5. That is now a 65% probability, and there's even some trickle over into 4 cuts. This, of course, cannot be 4 cuts. It just means half a point September cut, and then quarter point cuts after that is what you're looking at there. So there is a big difference, the reflection on what markets get here. And let's remember, as I stop this here, let me know if y'all can hear me okay, by the way. So, what we're going to see with the big thing that's going on here is, here, I'll find a quieter spot for you. Stay with me, y'all. We're going to go in the stairwell. There we go. All right. Nice and quiet in here. So, yeah, they got crazy loud out there. Mike Moranis is 50 bips, baby. I don't think they're going to do 50 bips, Mike, but they might. Especially now that Trump's got more of his people on on there. That's what they're going to be looking for. So anyway, thanks, Mike Brown. I'm glad that you can hear me okay. So anyway, getting back to it, this is a big shift. We got JOLTS data showing a labor market weakness, ADP data and jobless claims came in showing labor market weakness, and then the BLS jobs data. This is a big swing and a miss. Now, let's not lose sight. Trump is not going to like these numbers. We'll see how he talks about it, but there's nobody to blame on it. It just shows the realities of the labor market data. Is the Fed going to look at this as lagging data? We've now got 2 really weak, BLS jobs reports coming in, unemployment ticking higher, and there's expectation that we could see the tariffs pushed down. They could get found to be, unconstitutional when it gets to the Supreme Court, and we could see something happen there. But we've already seen them trickle in and have some inflationary effects, but not driving huge inflation. Of course, the Fed has, if they fight this, for long-term bonds like mortgage-backed securities, 10-year Treasury yield, you're not seeing as much of the drop because inflation is still a problem and something we don't want to see on those. But it's, the reality is that these are going to be some good mortgage rates. We don't have to worry about rates going back up next week. I don't think reprice risk on the day is low. I don't think we have to worry about seeing anything where this is going to get wiped away. I think these gains are going to be here, and we're going to hold on to them heading into next week. The next big thing is on the 11th. Of course, September 11th, which is always a date that rings for everybody. But September 11th, we're going to get the CPI data, and we could see rates move even lower. If that inflation is not bad, we could see rates get another boost. And again, these aren't going to be huge rate jumps, but we're getting closer to those areas where there's a lot of pent-up demand to sell and demand to buy. And when rates hit that sweet spot, if you start paying a point and getting into the 5s, people like the 5s. The 5s will be the magic number for most people. Sure, they'd love to see rates in the 4, but we're not going to. But if they can see the 5s, we've been into 6s and 7s for so long. So just sharpen your pencil, be ready, start talking to clients, get that stuff, new loans and, refis, cash out refis, debt consolidation. This is, going to bring us into that realm. So we've got all that stuff. But thankfully, again, I had been, if you guys read my written lock advice, and I did send that out yesterday. I had been locking anything closing in the near term because I didn't trust where we were going with this report. But the last couple of days, I moved into a cautiously floating stance on near term and was floating the rest because of the risk. Anybody can say that they knew this data was going to come in weak. Then they know more than I do. I don't have a crystal ball. There's reasons we could expect it, but if you get a surprise, it was going to hurt. But what the reason I changed my stance the last couple of days is because even if it had come in strong, it wasn't going to hurt us. We saw where the market sentiment is. And the market sentiment is right now that they're looking for the Fed to cut. They're looking for these things to happen. So anyway, I think we're totally good with all of that. We're in a good spot with this. It's a good time to celebrate, keep floating. I don't think you have to hurry up and lock anything to take advantage of these rates. I'm not worried about seeing these rate sheets disappear next week. It's a good way to end a weekend and have a fantastic week. Or it's a good way to end a week and have a fantastic weekend. So let me see what y'all have in the chat, and then I'll wrap up. So Holly Johnson said quarter point. I don't think we're going to see the half point because it's a fight between the two. I don't think. But remember, they did a half point last September. So we will get a little bit more because now we're going to get in the Fed blackout period. This is the Saturday before the Fed meeting, which is the Fed blackout period. So we will see some stuff through Nick Timiraos and some of the other ones. Mike says it's a head fake in order to cut rates. Some of the rates shoppers have already dropped the rate by a half point. This is from July 25th to this week. Some of my rates on my shopper. So I mean, that's huge. That's significant. And that's why longer term I had been floating, but it's the near term stuff that had me scared. But we should see some float down options. There should be enough of a move that even if you do have someone locked, that hopefully you can get them in the float down. Charlie says, would love to see 50 basis points, but think they'll stick with 25. With verbiage, they may be more aggressive moving forward if the data supports it. I think we could see that too. It's definitely, I think we'll definitely see Trump and his camp get very vocal after this jobs report and, after whatever they take. So anyway, y'all, that is it for me. Thank you for joining me today. Appreciate y'all with me. I'm going to get back to it because I am here in a stairwell but I am here in North Dakota for the weekend. I will come to you on Monday, probably from the airport or the hotel, but I will be live on Monday. We'll get to it. So, all right, my friends, hope you all have a fantastic one. Thanks again. And sorry I missed you yesterday. Thank you for remembering to join me today. Take care, everybody. Bye-bye.